you shared some of your research with us. You have some pretty lofty price targets for Mondelez, for Kraft Heinz. You also have a very bullish outlook for a company called Simply Foods that puts out kind of healthy snacks. Going into Q1 with those twin forces of the vaccine, potentially another variant, where do you see pantry loading? Where do you see that stocking up on snacks?
Well, we think right now for the industry, we're not really seeing much in the way of pantry loading. You've had so much at-home demand throughout the year. There's not really a lot, in folks' pantries at this point in time. We think the biggest issue for this industry is just weak sentiment across the board. We think these stocks have not recovered from the cost cutting 3 to 5 years ago, which really, drove sales weakness across the space. You see that in valuations where food stocks trade at a 30% discount relative to household products and beverages on forward numbers. That's twice the typical valuation gap. So we think there's low expectations for growth in 2021, 2022, low valuation. We think now is a really good time to be looking at these food stocks overall for total returns. In terms of the snacking space, we've seen outsized growth for this category, for a number of years now. We like this space quite a bit. We think looking at domestically in the U.S., we think healthy snacking is the way to go. You're looking at the CDC, modeling 40% of U.S. consumers being obese. Now, even with COVID, the worst outcomes for folks are those with diabetes and obesity. We think a big focus going forward will be sugar reduction. Much like tobacco was a big public health issue for the past 20 years, we think sugar is a health issue going forward. So in that space, we like low carb, low sugar snacking. Simply Good Foods, as you mentioned, our top pick in that healthy snacking space, maker of Atkins, Quest Nutrition, a lot of runway for growth there. On the indulgence side, indulgence is not going away either. You mentioned Mondelez, global leader in that space. We like the opportunity to grow globally there as well, double-digit EPS growth.
Yeah, I don't think people are giving up Oreos anytime soon. Expectations was a word that you used. The comps for these companies, they should be pretty favorable up until April. So before then, what kind of performance do you see for these stocks? And do you think that investors understand that 7% growth in sales year over year in December is actually really good for this sector?
We do. I mean, historically, you've seen this industry grow more or less in line with population growth, 1 to 2%. Year to date, we've seen grocery sales up, double digits, 10, 12%, even as recently as high single digits, 10% in December. Our expectation is that until you lap the pantry stocking we saw in March when COVID first hit, you'll continue to see high single digit revenue growth for this space. In terms of the stocks, we imagine they'll be flattish, through March, April. We think some value investors right now with a 12, 18-month time horizon are looking at it saying, low valuations, low expectations, even post-COVID going forward. Now is the time to get involved at, low valuation. So we think, value investors, more of a multi-year time horizon, are buying now. But we think, some of the shorter-term money, there's going to be a waiting period until after those hard comps cycle in March and April for some of the shorter-term money to get back involved in the space.
Shepard Smith here. Thanks for watching CNBC on YouTube.